The IPO market is in overdrive, kicking off the year with record issuance. It's unclear, though, how long the frenzy will last, as it always is. They don't ring a bell. Leslie Picker, she joins us now with more. It'd be so good if they would, wouldn't it?
That would be good on everything that has to do with the markets, Joe. If we just had some insight into when the good times would end. But unfortunately, like the rest of the market, the IPO market doesn't always tell you. But at least for the first 2 weeks of the year, more than $8 billion has been raised in IPOs. Just a remarkable number. To put that into perspective, if this pace continued into the rest of 2021, IPOs would raise more than $200 billion. That's nearly twice the amount during the most active year of the dot-com bubble, the year 2000. Now, while it's more likely that the IPO window eventually closes, the sheer volume and stock price performance is certainly striking. In the meantime, take Playtika, which just yesterday raised the most so far for 2021. The mobile gaming developer sold nearly $2 billion worth of shares, priced above the range, of course, because pretty much every deal this week has. Same with Driven Brands, which owns car repair shops like Meineke and Take 5 Oil Change. Driven, owned by Work Capital, raised over $800 million in its IPO, and both companies will debut today. Now, we'll see if investors are more discerning with these names after bidding up shares in other IPOs this week, names like Affirm, Poshmark, and Petco. On average, IPOs of operating companies have surged 56% this year. SPACs have also captured investor attention. Take Churchill Capital 4. This is the vehicle owned by banker turned serial SPACer Michael Klein. It surged more than 70% this week, just on reports that it will merge with electric vehicle startup Lucid Motors. Yesterday, the SPAC was the second most actively traded stock on Fidelity's platform after what's pretty much always on top, Tesla. Becky.
Leslie, what do you think of all this activity? You see stuff like this happening and you start to think, wow, okay, there's momentum here, but it always makes you wonder what changes momentum.
Yeah, I mentioned the word discerning because I think that's really, really important when you take a look at IPOs. For example, yesterday you had Petco, which is a loss-making, indebted retailer, basically. They do some veterinary work as well for pets that's been around for 55 years. And that company surged 60% on its first day of trading after pricing above the range. And then you take another company, Poshmark, which is more venture-backed, high growth, same with Affirm, also just surging in their debut. So it doesn't appear that investors are being as discerning as they normally are. They're just saying, IPO, name brand, let's bid up the stock. And that's great for a while. The problem is that when those companies start to report earnings, when those lockups start getting released and investors have to start really digging into these things, people can get hurt.
Shepard Smith here. Thanks for watching CNBC on YouTube.